The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 12th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Hey, if you can't dial in, well, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 362 points. It's 1.5% to the upside. S&P's up 30 points, a little over 1%. NASDAQ 100 up 92 points, 1 4/10%. Russell up 12 points. That's 8/10. Semis are up 2% plus. That's $27. So mean and green across the board. You've got the spot volatility index trading down $1.52. That's not as important as the price that it's trading at. Right now, it's at 18.72. And if we take a look at these markets, it's all going to be about one thing. One thing, Vasily. Not one ping, but one thing. And that one thing is going to be the spot volatility index. So let's go get to it right as we speak right now. You were the one who pointed out to me yesterday. You said, you know, Steve, that spot volatility index out there was trading above all of its futures contracts, and that just isn't right. At some point in time, it's going to go ahead and get in line. And I agreed with you. I said, you're absolutely right. And then we said, you know what? Probably the most important thing is, where is it trading in relationship to its 50-day exponential moving average? Right now, that's priced at 18.95. We're at 18.74. What you and I don't know is, where is that spot volatility index going to close come the end of the trading session at 4 p.m. Here's one thing that we do know, though, and that is, if we see the spot volatility index close below its 50-day exponential moving average, something that it hasn't done the last time we were down at this level. Oh, great. Something going wrong with the system out here, but looks like March the 16th was the last time that we were down below that level. If we get down below it, we stay down below it, where the spot volatility index will head to, it's the 1584 area. That's the current price projection. We'll have to adjust that as time goes, but that's where it would head to. And what will happen to the S&P 500? It will continue to move higher. Higher to where? Well, there's clearly, this is not going to work out as we thought. So we're going to switch, because we're now asking the question, where is it going to head to? Let's see if I've got this chart here working okay. Yeah, we do. So we can see here that another level to be watching today inside the S&P 500 is 2673.61. So I've given you two areas to focus on. The S&P 500, I gave you that 50-day number, what, something 95, 1895. A close below that is bullish for the market, specifically for the S&P 500. 2673.61 is the close from December 29, 2017. Getting above that would be a breath of fresh air. And that breath of fresh air says that price typically should head to, at a minimum, the March 21st low, 2709.79, and above that, then up to the top of the consolidation. The top of the consolidation, in essence, being the swing point from March 13th, 2018. That spot volatility, if it does what it's supposed to do, and it stays below that, that becomes your price target. And boy, once it gets there, it starts to get back very close to those all-time highs. It's really one number, one thing that you just simply have to focus on today. All the other things that we take a look at are just not going to matter as much as where does that spot volatility index close. So with that being the case, we have a request already that has come in from the Tiger's Den, and that is to take a look at Alaska Air. And the question is, let's see, Alaska Air, please, buy here. If yes, stop loss. So if we take a look at Alaska Air, we're going to use 3 different charts to take a look at it. The first one's going to be, hey, where's Alaska Air trading in relationship to its profiles, its market profiles out here? So, let's go ahead and get these stock charts. Let's look at long term. What is this thing doing out here? Well, it's made that 100% move of a move. What do we mean by that? We mean that the last monthly swing point was in June of 2016. And that was at a low of about 54.51. Volume there was 42 million shares. Price back about in January was moving now with 62 million shares. Way too much volume. Then in February, 54 million shares, getting a little bit better. Last month, 41 million shares. So very similar. It has not tested the low out there, the June 1st low. Does it need to test that June 1st low? No, it doesn't have to at all. Will it? I don't know. We're at 19 million shares right now. Today is what, the 12th? Trading-wise, trading days, I don't know how many trading days we've had, but seems like similar-ish type of volume out here, but it should be at a level of support. You can see that nice big old bullish engulfing candle from July 1st. It says that the low from June of 2016 should be support. Where's your stop got to be? Well, one of the places to write down is going to be 54, under 54.51 when we take a look at it. That's the longer term picture out here. If we take a look at a shorter term picture, that's going to be the daily time frame chart. By the way, the daily, the weekly, the monthly, all are below their market profile. So that is, in essence, short-term bearish. What we have out here is we've got another swing point on a daily basis. That was January 25th. And that swing point out there had volume of, what was it, 10.47 million shares. And when it was tested, even though we got below it, or price got below it, 3.5 million shares, it was not broken with volume. So what does that say? Well, first of all, it says you need to have a stop below at least 57.60. That is the low of the April 2nd area. And yes, on that weekly chart or the monthly chart, it did look to me like it could be a 3 drive to a bottom pattern. And we can show that out here on this chart. We should be able to. I think I've got my tool going out here. But it's not really perfect. Does it have to be perfect? Well, here's what it would look like. I think if I grab the right swing points, this is what a 3 drive to a bottom pattern in essence would look like. And you like it, looks pretty good. It looks like a beautiful set of butterfly wings out there. Of course, what you'd like to see out here, Mr. Z, on any type of pattern is you'd really like to see some type of bullish candle. And voila, today, you may have a bull separating line candle and perhaps a close above Stevie's red line. So yeah, I'd say if you're going to pull the trigger, it looks like you're getting that signal right now as we speak. It's a beautiful thing. Steve Rhodes with TFNN. I'll be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's go. What else should we take a look at? Okay. We took a look at one thing that should be relatively important. Another thing come the end of the trading session will be where are we at? Where are we at with regard to the daily market breadth inside the NASDAQ and the S&P 500? What you'll notice right now, this is as of 1:18 in the afternoon, that you have 24 constituents, 24 issues trading above the top of their box. Much different than yesterday. 20 below the bottom of their box. So we're seeing on a daily basis a nice slight turn, bullish bias out here. If that is how it ends the trading session, that's going to then go ahead and we typically don't see this, jostle back and forth day to day. So if you kind of put that together with the spot volatility index, and by the way, these crossovers can last quite a while. I'm not out here prognosticating that at the moment. I'm just trying to get you to take a look at where you might see actually a daily signal cross and confirmation, a move from maybe sideways neutral or bearish to actually bullish out here. And then if you're a short-term trader, you'll know which side of the trade to start really focusing in on. If this were 4 o'clock right now, based on what you and I have looked at, we'd say, okay, you need to get rid of the shorts out here. Not unless you're going to hold on to them for a long period of time because you're in at some level that is substantially higher where you shorted the market. You kind of get the feel out there. If this is something that you've done over the past couple of days, last week, what you're now doing, what you're now seeing, not what you're doing, but what you're seeing is a change in trend inside the NASDAQ, which arguably is the weakest of all the indices. We suggest that to you because of the weekly formation that it confirmed, which is the pattern that's been present before every bear market inside the Dow, not present in the Dow, because of the island top on the daily time frame chart out there. And so if the NASDAQ is starting to make a turn, you must say to yourself, something to think about. Now, if we go take a look at the S&P 500, again, it's all going to be about the end of the trading session. I don't know what it's going to end up like, but I do know what it is you and I need to focus on and pay attention. If we take a look at the S&P 500, we're just not there just yet. Only 116 constituents above the top of their box and 139 down below the bottom. So can the NASDAQ rule? Can the NASDAQ move the markets higher? Can it move the markets lower? Well, you answer that question, and we'll try to answer the question that Ron in Denver has. So let's go out to Ron in Denver. Thanks for calling. Thanks for holding. How are you doing today, Ron?
Great, Steve. Appreciate taking the call. I went along some calls on the XLK yesterday and for the end of next week, thinking that Amazon and Google and all these had bounced back. But the FANG stocks, what do you think of that? How does that look?
So the chart that we just looked at, which was the market breadth for the Qs out there, that is that's a positive. But let's specifically try to answer your question. I'm just trying to get another chart out here, so my apology. But let's go look at what the market breadth inside of the XLK looks like, if that's okay with you, since that's specifically what you called about. Now, you've got to give me a second here to go ahead and pull it up. Okay. So now, Ron, to answer your question, we'll go take a look at it a number of different ways. But what we see here from a daily time frame chart is there are, and it doesn't show the crossover, but it does show, so there's some kind of delay on the graph here. We're not interested in the graph as much as we are what's going on underneath the covers. And right now we have a bullish crossover inside of the XLK, which means there are 33 issues trading above the top of their box, 8 below the bottom, 44 within. So this has a bullish bias to it. Let's go take a look at an XLK chart, see if there's anything here that we can find, anything that we can see out here. And what we see is that this suggests to me that the XLK should continue to move higher, today's Thursday, at least through Monday, maybe longer. You might say, well, how did you come up with that? Today should be day number 7 of a Tom DeMark setup count, number 9 out there. And then that leaves tomorrow, Friday being 8, Monday being number 9. That doesn't mean that is where the market will turn, but the market certainly can turn at those points. The last time we see a TD setup count that occurred, a number 9 count out here, I'm coming back to January 26th. That's where the market actually topped out, in essence, the very 2 days later than that. So it looks to, now I know you said through next week, but you didn't tell me which day. So I'm going to give you through Monday, maybe Tuesday out there. Okay. Now, not that it can't move higher, but you're managing these call options, and that's what I see at this stage of the game for the XLK. Come Monday, maybe we have new information with regard to what the spot volatility index is doing. Maybe we have new information with regard to a daily bullish crossover inside the S&P in general. And if we see all those things out here, then what we're going to suggest is that the XLK could continue to move higher. But as we speak right now, 1:23 in the afternoon, it looks to me like the XLK should continue moving higher into the early part of next week.
Great. Now look for that. Thank you, sir.
Oh. You bet. Thanks for calling. That was Ron in Denver, and that was the technology sector. That's the number 1 weighted sector inside of the S&P 500. Of course, what you can do, what Ron can do, what each of us can do is just simply go take a look at the top 5 or 10 issues inside of that sector and see how they are trading. But in essence, I think we've pretty much been able to figure that out by taking a look at these 2 different sets of charts and graphs out there. So we want to take a look at, let's look at what's going on in the advanced decline oscillator readings out here. Everything is above 0 at this stage, so that's good. New York Stock Exchange is breaking out of its descending price channel. So I would say, hey, Ron, that's pretty good to you. That doesn't mean it doesn't have resistance. It does. It's got that resistance from the downdraft of March 22nd. Suggests that the New York Stock Exchange should head up at least to the bottom of March 21st, and that is the 12,654.72 area. Let's remember that even with today's move out here, it's still not the average true range. It is still not the average true range of the daily price movement. Inside the Dow right now, we're up 293. I think we've been up as high as, let's say, 350. The average price movement in the last 10 days is now 484. 484 points out there. So maybe that's where the day is going to end. I don't know. What else are we watching out here? Well, what else are we watching? What else are we watching? What else can you watch out here? Let's take the bearish side. What's going to be the bearish side come the end of the day, right? We have to take a look at both sides of the trade out here. And in doing so, just like gold yesterday, just like silver yesterday, hit a level of resistance. That's what we're really watching for inside of the Dow. Now, I'm going to pull over the Dow equity futures contract, and you're going to see that descending price channel out here. You're looking for 3 common contacts, opens or closes of candles out here. And you can see that price over the last couple of days, really yesterday, the day before, testing Stevie's red line, closing above that. But now we're breaking above this descending price channel. The actual message, if in fact this occurs today, says that the downtrend has ended. But you've got to go identify where there's resistance out here inside of the Dow. And we've been asked to bisect and or dissect the Dow Jones Industrials daily and the hourly chart. Now, you're referring to the actual cash indice or looking at the equity futures contract? We'll find out as we're in this break, and we come back. We'll go ahead and take action, massive action. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the question was if we could take a look at the actual cash indice for the Dow Jones. So let's go ahead and pull this chart up on the screen. You're going to clearly see here the descending price channel. And we can see right now prices underneath the top of that channel line out there. Really easy to draw. You can see that you've got 4 touch points out here. Those touch points being, well, let me get my crosshair out here, going to be the close of January 26th, the open of January 29th, the open of the trading session from February 27th, the open of the trading session from March the 12th out there. So we've solidified, or it has solidified, a very nice descending price channel. Right now, as of 1:30, price has rejected that area. So if it's rejected that area, then we have, and this is where the market closes. Our read right now is it has not broken out. We've got more thrashing around to the upside, to the downside. There's nothing bearish here. The only way we could make a bearish call on a daily chart would be a close below Stevie's red line, 24,079 or 24,430. Remember, average daily range is in the 470, 480 area out here. So that's just your average day. That's basically the difference between where you're trading right now and where Stevie's red line is at out here. So a close above that descending channel line says, yes, a breakout has unfolded inside of the Dow. That is the message of the daily chart as Stevie sees it as we speak. But the question was, can we also take a look at the hourly chart for the Dow? So as we pull this over here, we don't do that too often. We typically take a look at the equity futures contract. But we're going to see here, back on April 2nd, the Dow equity futures contract on a daily time frame made one of those beautiful bottoms. Price moving lower, doing it with less relative energy, and then voila, at 15:30, so what is that, 3:30 in the afternoon, in arrives the cavalry. They punched in at 3:30, formed that nice little bullish engulfing candle. The very next trading session going into the close, price runs up right into resistance, right into Stevie's red line. The very next candle session above Stevie's red line, plus you had follow through on the one before that. That was your buy signal. That buy signal, turns out, has worked pretty well. If we take a look at the hourly chart, and we begin with the session, this is on April the 5th, I believe. Let me see here if my system will cooperate with me. There you go, April 5th, and that was at 15:30 as well. Interesting. We're always dealing with the 15:30 time frame, 3:30 in the afternoon. From that high, that is resistance. Why is that resistance? Well, Ron and I were taking a look at the XLK, just as you were as well, and the suggestion there was that the XLK should continue to run higher at least through Monday, going ahead and extending. Now, how much higher we didn't talk about, but should continue running higher to form that TD setup 9 count. It was because we were already at count number 6 yesterday. Looks like today should be 7. 8 and 9 takes us to Monday. If we take a look at what the 60-minute chart did for the Dow Jones, you can see that its most recent bottom was at 15:30. 15:30 keeps showing up here. That is something to think about. That's 3:30, and here you see that TD setup 9 count. Not always is it a change in trend. Inside the 60-minute chart, we can see several changes of trend occurring on that 9 count. Then what happened? Now, the other side of that 9 count, you will see that green dashed line on my screen. That becomes resistance. Look, also becomes a 100% move of a move. That's what we saw take place out here right as we came in at 13:30. Thank goodness it wasn't 15. It could be 15:30. We're not at 15:30 just yet, but we were at 1:30 just 4 minutes ago, and price ran into resistance. Does that mean it's the end of the move? No, price just pulled back into Stevie's red line on a 60-minute basis. 24,420 was the number. The last bar was bar number 4 of a TD, potential TD setup 9 count out there. So what does this mean? Means right now we're making higher lows on a 60-minute basis out here. Until we start to make lower lows, you would just be guessing that the market is going to sell off. That means you've got to see, you don't have to, I'm just suggesting, that you have to see a close below the low of, yes, you guessed it, what time? 15:30 in the afternoon yesterday. If you don't close below that low, which, by the way, that price point, I can give that to you, exact to the digit out here, is 24,150.87. So at this stage of the game, what did the market do? Ran up into resistance, backed off into support on an hourly basis. No indication at all that the move to the upside is over. However you're trading this, please keep your stops tight. We've got lots of price movement out here. Don't get on either side of the trade. Don't get overdone, so to speak. Where's price headed on a 60-minute basis inside of the Dow? Well, if it's not headed to the downside, it's going to head up to a high. You think I'm going to say 1530? I'm not. I'm going to go ahead and say 1430 in the afternoon, taking you back to March the 21st out there. In fact, if we take a look at the possible A to B equals CD pattern out here inside of the 60-minute chart for the Dow, it would go ahead and it would give you a price projection out here. Drum roll, Johnny. 25,015 would be the number where price ought to head to if it can take out the high of the day. So there is your 60-minute chart for the cash indice for the old Dow Jones Industrials. So what else should we look at out here? Well, I mentioned to you that gold and silver ran into resistance yesterday, right? If we take a look at silver, let's start there. Silver, by the way, is trading down 28 cents. That is 1 7/10% out there. Imagine if we're trading down 28%. But in this case here, what did price do yesterday? This rectangular line was drawn in days ago. Weeks ago, probably, but certainly days ago. I didn't touch this thing. What did price do? Ran right up into it. Now what we've seen is price pull back. Does that mean it's over? Of course not. What it means is that we're just simply inside a sideways consolidation range. How long is this going to last? I don't know. But silver could easily make its way back to 1610. That's not going to come into play unless you see it close below 1642 out here. Just the sideways chop. There's nothing here for the bulls or bears unless you're really quick with the fingers on the short-term trade. That's what silver did. What did Goldilocks do? Well, you know, we were taking a look at the descending trend line out there. Let me go over to another panel because I think it's already drawn in there, and therefore I don't have to touch anything. And so give me a moment to pull that chart. That chart is where? Right here. So if we take a look at this chart, this is how valuable, how significant these trend lines are or can be, or channel lines. Here's a trend line. This is a trend line, the daily chart for the April contract for gold. Just simply coming from their highs out here. You see the high right around, I don't know, looks like the 26, 27. Let's see if we can get the actual date out here. Come on, work with me. Work with me. Oh, man, there we go. Crosshair. Come on. And that is on the day of January 25th. That is touch point number 1. Touch point number 2 is the date of February 16th. Touch point number 3 on the trend line, well, that's the day of March 27th. And you can see that the body of the candle, which is truly the essence of price, closed right back below that trend line. What has gold done today? Just testing Stevie's red line. Gold's not going anywhere significantly until gold priced in euros 1107.70 gets taken out, which it has not been taken up.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 275. Question coming in here from Ivy. And Ivy says, I've learned a lot from you and Mr. Garrow. Hey, Garrow, I know you're listening. How about that? Told you how important you are to the show. And Ivy confirms that. Ivy goes on to say, I've been looking at MasterCard. Well, it was Garrow who called in about MasterCard, and I'm wondering if now is a good time to enter for a middle to long-term investment. Many thanks, Ivy. Well, I can share with you that I believe that Garrow is not in on that trade right now, and the reason that he is not in, and if I'm wrong, Mr. Garrow, would you please give me a call? But the reason that he would not be in this trade just yet is because he's waiting. He religiously waits for that 5-day simple moving average to cross over the 21-day moving average. Now, as we speak right now, my system has the 5-day at 172.62 and the 21 at 175.56. So if you're asking for Garrow's opinion, which I think you should, the answer is no. You don't have the confirmation that he would be looking for out there. That doesn't mean that MasterCard won't move higher. And they're looking at this from a middle to long-term investment. So can we find anything else that says it's outside of a moving average cross out there that says, well, maybe it was a bottom last week. Where is price headed to? All of the above. Well, if we take a look at the horizontal trading ranges and we look at the center panel, that's the green lines out here, what we're going to take a look at is really since the week of February 19th. You could almost back it up and say the week of February 12th. So we'll do that. So since February 12th, now we're at April the 12th. How about that? So for a couple of months here, what MasterCard has basically been doing, IV, is just trading in between 171.80, 171.06, and 182.53 out there. So if that's what it's been doing since then, there's really no reason for it to not do it now, which is get up to about the 182.50 level. That's what these horizontal trading ranges are doing. But your question was, is it a buy right now? And you reference Garrow's work from an intermediate term standpoint. Well, he pretty much, is my recollection, it doesn't hold things for long periods of time because he's an extraordinary shorter term type trader out there, but I can't speak for all of his investments and trades out there, so I won't. But if we take a look at the TAS market profiles, that's another tool out here. What do we know? Well, we know that the acting just like the S&P right now, so we can't. How much weight do we put on the volume aspect of this? For example, April 5th is a short-term swing point. This is a trading session. This is the daily chart, I should say. 3.4 million shares right now. You're 1.5 with 4 hours into it, right? Yeah, with about 4 hours into, a little bit more than 4 hours into trading. So you got light volume coming into that swing point. The weekly chart suggests that price ought to get into the 181.04 because it's got a bullish structured profile, the bottom of which was hit and held last week, 167.57. Volume was coming down into the February 5th area. That had 31 million shares last week. Majorly light volume, 20 million shares. Not enough, Ivy, to bust it to the downside. So I would say on the shorter term base, I'm going to answer it this way. You don't have that crossover that Gar would like to see. And all it's doing right now is trading inside a range, 180-104. No idea whether it's going to be able to bust out of that. Let's go through the hypothesis that it won't. Then that says price might go ahead and pull back down to the 167.57 once again. So I hope that helps you out. Thanks for writing. If I take a look at MasterCard, the reason why I would also suggest that price might move higher, although it doesn't show Stevie's red line on this chart, it shows Stevie's black dots, 174.99, I think is the number. If price closes above that, odds favor heading up to that higher level that I had given to you. So that's my take on MasterCard right this moment. That's 1:46 in the afternoon on April the 12th. Thanks so much for writing in. Let's see if we've got any other questions. I see one here from Phil. Phil, I will respond back to you by email out there versus try to address that question right now. But Phil's basic question was about using the Heiken Ashi type candle out here, if I've pronounced that properly, and I probably haven't. But in any event, I'll just simply address that with you individually. No earth-shattering stuff, by the way, out there. So I don't see any other. Well, I do see a message here. Is there a message? Just a message. A message coming from one of our dentists. You got to love this. You get the most extraordinary group of individuals that are inside the community here at TFNN. What a great peer group we have. And I'm referring to you even if you're not inside the Tiger's Den, which is the predominant majority. But when you just take a look at those folks who take the time to write, those folks who take the time to listen on their mobile device, or they're watching on their computer, or maybe through the e-signal platform, or watching or listening to an archive show, maybe it's through iTunes, maybe it's through YouTube. I mean, it's a great community out there. And a couple of our community members, a Mr. P and a Mr. Z, two poets. They don't know it. And Mr. Z writes in, see Mr. P's post below on Larry Fink. I know this. Fink makes big statements like that rarely. The big statement being, I've got to go read that text. Okay, give me a second here. The big statement is, where's P's statement? P, where'd you put that? I see something about a Gene Simmons bottom, but that's not it. Where did you have your statement out here? I should do this a little bit better, but BlackRock, there we go. BlackRock CEO Larry Fink, do not try to time this wild stock market. 7 hours ago, the key for investors is stay in the market. BlackRock's Larry Fink says you should be 100% in equities. Got it. Thanks for that post. So that is potentially influencing Mr. Z, who believes that Larry Fink doesn't make statements like that very often. And since he collaborates with the powers to be out there, the question is the bottom in for the Dow? And Mr. Z says he doesn't, he's not ignoring that chance. And I'm not ignoring that either. I wrote in this morning's newsletter, Mr. Z and Mr. P, that if the Dow was going to form some type of top, similar to, for example, what the NASDAQ has already done, NASDAQ and NDX 100, that the Dow would do it, my prognostication was in June or July or this summer. I am not saying that's when a top is going to come in. I'm saying that is the more likely time period, now the seasonal pattern inside of the Dow, and it's not for this reason, but it just happens to be a coincidence, and I don't believe in coincidences. But the seasonal pattern for the Dow is that it moves higher, well, moves higher into the middle of May, pulls back, and then moves higher once more into July. And then from July through October moves to the downside. And if it actually does that this year, well, then that could be a fairly significant bearish message out there. Yeah, maybe we don't get to Stevie's 30,740. Or maybe we do. Steve Rhodes with TFNN. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So great workshop last night. I want to thank everybody that attended live, and I want to thank all the many that are going to be listening to that archive over the weekend. And I'm available, obviously, to each of you to review any questions that you have. I enjoy doing it because it's such a incredible tool that I was able to share with folks and be able to give them the exact steps of exactly what to look for. After doing the workshop area, we had some great questions that came in. We took a look at some short-term charts out there. One of the attendees wanted to take a look at using the same set of tools, using a 2-minute chart, and we went back and were able to prove that, yeah, works on a 2-minute time frame too out there. We looked at the 2-minute, the 10-minute, and so forth. If we take a look at the New York Stock Exchange out here, New York Stock Exchange gave one of those, actually gave several bottoming signals. So price was moving lower, doing less relative energy out there. Gave you the nice confirmation when price gapped up about 2, 4, 5 days ago. As it was making that bottom, I've got it as a TD sequential 13 count, and price closed over. Price gave you that confirmation of a bottom out here. This is the New York Stock Exchange. So for those of you that simply like to use the New York Stock Exchange as a guideline as to what the markets are doing, you had 2 confirmations of a bottom on April the 5th out here. Price above Stevie's red line is in essence acted as support ever since price has closed above it. That's 12,412 out here. So that is right now at this stage of the game short-term bullish. If I were going to, I'm aware of the resistance area inside the gap to the downside on March the 22nd. Gaps are your friends, bullish or bearish out here. So the real message comes in essence from either the low of March 21st or the high of March 22nd. If price is able to take those levels on, then what you can anticipate is price being able to get back into the highs from February 27th. So, folks, thanks so much for being here. Hey, my apology in advance. I will not be able to do tomorrow's show, but I am hoping to be back with you live on Monday. Live versus Memorex or anything else. Stay tuned. Your favorite polar bear's up next, David White. Have a great Thursday, great weekend. Look forward to seeing you on Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.